Hey, how you going? It's Rick Neuenhoven here for those that know me, which will be most of you because it was sent to our database, and I'm also broadcasting live on Facebook. I just wanted to give a quick update on where we're at with the market. It's more of an employee perspective rather than employer perspective at this point in time, but I've got a couple of links that I can show potential employers or people that self-employed. Happy to answer any questions via the Q&A function as well. It's only myself manning this webinar, so I'll try and keep up as best I can. And yeah, thank you very much for your ongoing support with the business. Like a lot of businesses at the moment, it's a difficult time, and for employees, it's a stressful time as well. So I think South Australia, a lot of my clients are South Australian, but we do have some interstate clients. We seem to be on top of it. I got told that maybe some of the restrictions might be lifted soon, which will be a good thing. Yeah, so where are we at? Firstly and foremost, talking about finance, all things finance. loan deals at the moment are still going ahead. And I would suggest that if you are in a position to act on finance, now is the time to be acting on finance and not later, because we don't know where the mortgage industry is going per se. So my recommendation to anyone that's thinking about doing something, my tip is to actually do it now rather than think and wait and see what happens on the other side, because we don't know what the other side is going to be. I don't think interest rates are going to rise. I would suggest that, you know, we're in a recessionary economy at the moment, which is an economy of opportunity and shouldn't be something fear-based. It could mean for some of us that have been displaced that we do need to look at alternative career paths, whether that's re-educating ourselves or looking at where the demand is in the market. Sometimes we get embedded in our life and we become complacent, and therefore we don't actually initiate any change until change is forced upon us. So this is an opportunity for some of us to create change. So you usually find in these environments that they facilitate people buying franchises. Franchise purchases go up, for example, because people look at opportunities to do something for themselves because their job is no longer there. So take a look at your life at this point in time. I would recommend and see where you can take stock and maybe make changes to secure your ongoing future. However, what I would suggest is that, as I said earlier, that mortgages, for example, we don't know what is going to happen on the other side. So therefore, if you are thinking about a loan or refinancing, now is the time to look at it. And I'll give you a couple of examples. One example is if your employment situation changes and you are put on the JobKeeper program, for example, we don't know how the banks are going to take that financial change. And outside of that, when your position has transitioned, if the employer has no choice but to transition you from part-time or full-time to casual, employers look at casual employment differently, and it could mean that on the other side of the corona, you have to wait an extended time frame before you can actually be able to get access to new loan and new funding. So that can be something of interest. In relation to the property market, what we're finding is there's minimal change at the moment to the property market. People are still putting houses on the market. There's still buyers there. All it could be, if you're a potential vendor wanting to sell, it could just mean that your time frames are going to take longer than expected. However, the property market at the moment seems to be reasonably strong. What we may find going forward is that days on market are going to be prolonged, and people that are in a position where they need to sell or for sale, they could be in a bit more trouble than those that have an option whether to sell or not. So the key to success is to be in an option to sell rather than forced to sell. In relation to the banks and deferring loan repayments, it seems to be a slow and elongated process. So you need to be patient. You may need to chase up the banks. For my bank, for example, I put in a test to see what would happen, and the only option with them was to actually do an email. I did that 2 weeks ago, and I'm yet to receive communication back. So it shows that their processing timeframes are quite long. So even if you don't need to defer any of your payments, which I hope most of you don't, because at the end of the day, if we do defer payments, all we're doing is we're adding responsibility to pay it back further in the future anyway. So it's not like we're going to have to not make that repayment. It's just that those repayments or that interest is going to have to be caught up. And it's the same for tenancies and renters. You have to prove that your wages has significantly downturned to not pay rent. And if you do not pay rent, you're still going to have to catch up that rent at some stage anyway. So I wanted to screen share quickly with you a couple of one of the pages that I found. If I can find it, here it is. So if you want to find anything in relation to the government and what's on offer to support you, I'd recommend going to treasury.gov.au first and foremost. That's where a lot of the announcements are coming from. And the most important one for people is the JobKeeper payment for employees. Now, employers are eligible for the JobKeeper payment if they have a downturn or they forecast a downturn of 30% or more in their sales revenue. If you're an employee and you've had restricted wages through this coronavirus, or they've asked you to stand down, you will still be eligible for the JobKeeper payment as long as the employer pays you in the month of April the $1,500 a fortnight, which is equivalent to $3,000 a month for the month of April, for that to be reimbursed to the employer. You'll find that there is this form, the JobKeeper Employee Nomination Notice. You can get this off the internet, but this needs to be completed by the employee, obviously your details, date of birth, address, all that sort of stuff, and the employer has put their entity and ABN, and that has to be lodged with the tax office, but it has to be, try and get it back to the employer. As you can see here, this should be returned before the end of April 2020. I don't believe it can be lodged before the 20th of April with to the tax office. So there's still at least another week away, but 2 weeks to have that lodged. But as you can see, to find out more, you can go to ato.gov.au general JobKeeper payment. But Treasury has all the go-to information. So the most important part is for you, if you're going to get the JobKeeper payment, that you have that form completed, and you can get an FAQ sheet for employees on the Treasury site as well, and also some examples. But the most important takeaway is the employer, if they're going to put you on this program, they need to pay you the $750 before tax. They don't take tax out of the $750. They have to pay the $750 and then the tax on top of that. So the winners here could be permanent part-time employees. If you get paid less than that, you could actually have an increase in your pay. For casual, you had to have the 12 months proof of employment as a casual employee to be eligible as well. So the thing you might want to check your employer is that for the month of April, they pay the $3,000 to you. So therefore, they'll get that reimbursed to them with the government subsidy. And the rest of the technicalities is for them to sort out and not for yourself. The other one that you might be interested in, and I'm only talking general advice here, you would know this from previous discussions, I'm not a licensed financial planner anymore, so I can't give you specific advice in relation to how to deal with your super, and so I'm not telling you to pull your money out of super. But if you want to consider that, you can either see a financial planner, speak to the superannuation fund itself to get advice, or you just make your own decision. But you can get access to your superannuation in two parts, one before the end of the financial year and then after the financial year. If you saw my previous webinar, you would have seen us talk about, myself and Brian, the pros and cons of withdrawing the money out of your super. The one thing I would ask you to consider is that if you do take money out of your super, what is the opportunity cost? Your super fund's probably taken a hit unless you're in cash at this point in time, and so therefore, if you are taking money out of your super now to cover your mortgage repayments or your rent, for example, it could be a short-term relief but a long-term cost to you, because the market's now, you're going to be pulling money out at a low market which means there is an opportunity over the next 6 to 24 months for that money to regrow as we come out of this cycle. And by pulling that money out, you're going to miss out on that opportunity. So pulling out the money could be a short-term gain, but a long-term consequence. But again, your superannuation fund provider, a financial planner could explain that to you in a bit more detail. Now, I do understand that some people can't do anything else but actually take that money out. If that's the case, well, I guess you go for it. But again, just seek the regulatory advice to go around it before accessing it. The JobKeeper program is also applicable to self-employed people. So they can also register for the JobKeeper payment, and that is available for you as well. They're the major points I just wanted to cover off on this. I noticed John has asked a question. Let's see if I can answer it. What if you had a part-time second job but can still work your primary job? Highly unlikely. I believe that they would do it. I would talk to your employer about it, however. Could be a bit of a loophole, but it is really to assist people that are under financial duress. And I guess you could argue that you could be under financial duress if you don't have that part-time job. But it's a good question and a tricky one. Yeah, I would speak to the employer, and you may it might be worth reaching out to the tax office and seeing what they say. But yeah, there could be a bit of a Pandora's box there. So I find there wouldn't be many people that would have a full-time job and also a part-time job. But if you have a casual job and a part-time job, I would imagine, especially if you're casual where you're not eligible for the JobKeeper, you would probably be eligible for the JobKeeper through the part-time component. Hope that helps. Tomorrow, we're going to do another webinar on the what's your magic number, and talking about superannuation in a bit more detail and how to handle the drop and calculating what we can do going forward to try and catch it back up, of a general nature, of course. And we'll provide another short video going forward on Friday as well, just to give you some extra information. Thank you.